Talk about what happened at Jackson's Hole, the speech that could move the market. Kevin Warsh's first keynote put interest rates, treasury yields, and high growth technology stocks in focus. The meeting's from August 27th to 29th. The keynote was this morning at 10 a.m. Eastern on August 28th. One speech, two possible paths. The market wants a clearer signal on the future direction of interest rates. As of August 27th at 4:15 p.m. Eastern Time, the September rate hike odds are 34.4%. There's a live debate right now with inflation. Some data shows easing, but inflation remains above the Fed's target. Slowing, growth and employment. Economic momentum is losing speed. Divided Fed. No clear consensus. Policymakers remain split on whether the inflation risk still requires tighter conditions. That uncertainty keeps Treasury yields and growth stocks highly sensitive to every word. Here's one scenario where Warsh is hawkish. He keeps the pressure on. Inflation is still above target. Financial conditions must remain tight. Further hikes stay on the table. Rate hike expectations rise. 10 to 30-year yields move higher. Higher valuations on tech and AI face pressure. The market message, higher yields compress the valuation of companies whose profits are expected far into the future. Another scenario is they go dovish. War signals are no urgency. The recent rise in long-term yields has already tightened conditions. Additional rate hikes may not be needed now. So rate hike expectations fall. 10 and 30-year yields pull back. Technology stocks gain support. The market message is lower long-term yields can revive risk appetite and give growth stocks room to re-rate higher. Now, don't just listen, watch the reaction. The bond market will tell investors how the speech is being interpreted. One, the 10-year yield. A sharp rise raises risk for growth and high valuation sectors. Two, 30-year yield confirms whether long-term financial conditions are tightening or easing. Three, AI hardware. Look for support to return after NVIDIA earnings if yields pull back. The bullish combination, yields pull back and AI stocks hold support. The bottom line is falling long-term yields plus resilient AI leadership could improve the broader market environment. What happened? The hawkish scenario played out. Warsh sounded hawkish and yields rose across the board. The 2-year hit a 1-month high and even the 30-year edged up. So September hike odds went up from 35% to 57%. The 2-year Treasury yield increased to 4.35%, and the 30-year Treasury yield even went up to 5.21%. So what's the market message? The 10-year climbed to 4.73%. Even the 30-year rose to 5.21%, just a smaller move than shorter maturities. So again, we have this dark cloud, we have this heavy line of resistance on the upper end of the chart, plus now this headwind, if you will, of all these rate hikes. As rates increase, momentum and borrowing costs go up, curtailing growth. So let's see what happens in the next couple of weeks. For me, it indicates the market could go down next week. If you like this, please like and subscribe.